Hi, I'm Shelley Sanders, and I am here with Rebecca Remitich to talk about one of the most recent seminars that we offer to our membership, the home buying process. You know, if you really don't understand the home buying process, that American dream can truly become a nightmare. There was so much interest in the seminar that we did, so we thought it would be a good idea to just recap some of the highlights and the most important points for you guys.
Yeah, so Shelley, the biggest question I see that everyone has is how much house can I afford? What size home and can I qualify for? So I think that's the first question, and I know there's a series that they have to go through, and it can be overwhelming. So how do we try and break it down and make it easy for our members?
Well, the first thing that members need to understand is look at your gross annual income. So the general rule of thumb that lenders look at
Mm-hmm.
is it's 2.5 times your gross annual income. So if you make $50,000 a year,
Right.
generally you can qualify for a home that costs up to $125,000. Now, the important thing to remember there is that it depends on how much debt you have as well. So
Right.
looking at it from a budgeting perspective, you don't want to spend more than 27% of your gross monthly income
Okay.
on your house note, and that house note includes your mortgage payment plus your taxes and your insurance.
Okay.
And so 27%. So on a $4,000 gross monthly income,
Mm-hmm.
that's about $1,050 a month.
That has to include the insurance, the escrows.
And the principal and interest, yep.
Okay, so that's everything. So where they may say the mortgage payment is 1,040, that may not include all of the insurances that go along with it.
Exactly.
Okay. So what if you mentioned the statement of how much we could afford? What if you throw in student loans? I mean, student loans is, almost for some people the amount of the home that they can afford. It's a
Exactly.
very big number, and I think people are scared
Yeah.
because of that.
Yeah, student loans are extremely important, along with all the other debt that members may carry. Because while your mortgage note, 27%
Hmm.
of your gross monthly income, the reality is that including all of your other debt, a lender doesn't want to give you anything that's going to bring your debt to income ratio over 37%.
Wow.
So if you're looking at that same $4,000, right?
Hmm.
And you have your car note and your student loans and your mortgage and your credit card debt, 37% of $4,000 is only $1,480.
Right.
And so for most people, that 1100 to 1480, that's
Right.
just a car note. Um, so someone who has a lot of student loan debt, say $80,000 versus
Hmm.
someone with 30,000,
Right.
everything else may stay the same. But if that person has a high amount of student loan debt or even a very high car note, it
Right.
can knock them out of what they qualify for their mortgage payment.
Okay. That makes a lot of sense. Now, what can we be looking at for closing costs? And what does that include? What is that definition?
Closing costs are everything that would be paid to others during the home buying process. So, for
Okay.
example, attorney's fees, title work,
Mhm.
appraisal, like all of these things, taxes and insurance and transfers, you have to pay that up front. And it's not
Okay.
just a buyer or a seller cost. Each party in the real estate transactions have closing costs that
Okay.
they have
So
to deal
both
with
parties are responsible for the closing
for their own
costs.
closing costs. Yes.
Okay. Now, what about credit history? How important is historical credit data?
Wow.
And how do they look at that?
Credit history is extremely important.
Mhm.
For most lenders, if your credit score is under 620, they're not going to give you a mortgage loan. So, realistically, you want to know what your credit looks like
Mhm.
well ahead of time so that you can start taking those steps to repair your credit where it needs to be repaired. So if you've been making late payments, 30 days late on your credit cards or your car loans,
Mhm.
and it happens because you're really busy at work and you just forget,
Right.
you want to get into the habit of making those payments on time for a minimum of 6 months and start to rebuild your credit score. And it's actually, I'm glad you mentioned the credit score because GNO has done a seminar previously on understanding credit, and there were many, many tips on how to improve your credit
Right.
to help you prepare to buy a car, buy a house, get the best credit card interest rates, and
Right.
things like that. So I highly recommend to our membership that if that seminar becomes available again, you will not want to miss that one.
And we do those in our lunch and learns also, reviewing credit history and talking about how to fix your credit. So it is very important, I think, before the process even starts, I think maybe to look at your credit and be sure where it is where you think it should be.
Absolutely. Yeah.
Well, thank you, Shelley.
Oh,
I've
you're
learned
welcome.
a lot.
And for just to wrap up, GNO offers several different types of mortgages, from conventional to USDA, VA, FHA. Go to our website at www.gnofcu.com and click on the mortgage tab. And there you will be able to find out all of the specifics about those different mortgages. There are mortgage calculators, and prepare yourself, to buy your first home.
That sounds great. And don't forget, we do have that grant money, the federal funds. It's $7,500 you can use towards your closing costs or your down payment on your first home. So it's definitely something to look into.
Thank you for taking the time to watch this video, and we hope to bring you another great one soon.
Thank you.